good afternoon, or shall I say early good evening, or good early evening. This is Barry Hemsey. I'm with Hemsey Analytics. We've been doing this since 2007 for you, more organized recent years, every Wednesday. As always, it's recorded, and it'll be posted in our YouTube channel, right there. It says videos on the website. You just click it first on what's called footers. This is the footers area, first link. Okay. One key comment I want to bring up. There was a question from a gentleman here. I'm going to get into that, but first, please, I cannot answer emails or phone calls on something related to what we do here, which is proactive market timing. Why? It's just the way things are. I don't have full First Amendment rights like you do because I'm a newsletter writer. Because of that, I'm restricted to ask a question aloud in a forum that others are allowed to be there. Whether they pay or not doesn't matter, but they're invited, it's open, and it's being recorded. This protects you, protects me, okay? So I'm not trying to be hard-ass. It's just I can't answer it until we're in this setting. And since we do it every Wednesday, my suggestion is to hold on to your questions there. Now, we'll bring the question up because it's on the email. I'm going to get into it, but not now. Let's go through our routine here first. First of all, housekeeping. A couple of good news. ORB 4.9 1.05 is what we're using right now. That is our system that is being run in ORB. Now, of course, it didn't trade today because it's a Wednesday. But if I arm this thing, hold on, let me arm this thing. Why is it not armed? Oh, okay, that was testing. Okay, let's arm this sucker. And then when you arm it, you see the version number. It shows up. Now it's at sign because it's doing a benchmark. So it's not open. It is not attached to a live account. It should be, but it's not. But 1 point. Okay, now what do we got here? Someone? Okay, there we go. You see it's 1.0602. This should be available this weekend for distribution because M contract is coming. We're going to roll over to M. As you know, there is also, the question is, when is the rollover? It's simple, guys. CME rollover. We don't do it anymore haphazardly by us deciding, well, I like a Wednesday before, Thursday is better. No. Now it's published. Keep this in mind. CMEgroup.com/trading/equity-index/roll-date.html. And you can see the U.S. indices, and with the expiration of 3/17, which is next Friday, you see the rollover is next Monday. So per our OTF protocol, we will on 12th, which is Sunday, we're going to roll everything to M contract, including the ORB on Monday. Okay. Keep track of this. You don't have to email me. You know what it is, and it shows you what we do. Forget this part. This is Nikkei and topics. You know, the Japan and South Korea. Forget that. We won't worry about this. Okay. Now these are, remember, this is indices. This doesn't apply to crude. Doesn't apply to bonds. It only applies to ES, NQ, YM, and EMD and that kind of stuff. You know, stuff. Okay. So we'll hold that. 1.06 basically allows the second trade to be better managed. We've been looking at it for a while. We had to do some code change, and because we got rid of IOG, which is interbar order generation, which is a very haphazard, it caused a bunch of problems. TradeStation on the record saying there are some issues there, and so on and so forth. And you know what? I'm not the type, you know me, I don't ask, I don't beg. I issue orders. Either you follow or you get out of my way. It's that simple. So I did the same thing with TradeStation. I said I'm going to get a programmer to write my own API. And we're almost there. But the first thing we did was that we want to make sure we debugged 4.9 very well. We added log files, which is a lot better than the Trade Manager, and also now we built a routine in there to do benchmarking. so we know what 4.9 is doing versus we go to 5.0. 5.0 is what's called order tickets and data providers. It is not changing the core. It's not changing ORB concept. All it's doing is managing it, especially because we have two system houses in Chicago that are fairly big. Order size around 100 each, so 100 contracts, yeah. So we have to manage it a little bit differently, okay? And that's what this machine does. And it can do a burst or it can do parse data out, the orders out. So very cleverly done. And constantly interrogate your account. Make sure you're not taking too much risk, and make sure it knows exactly what your positions are, so that we're not over or under. Very useful, yeah. But and it's done by a guy with 15 years at Easy Language Department under umbrella of my key programmer, which was there 25 years. First product manager ever hired by TradeStation. So we're very, very extremely fortunate to have this brain power in. Of course, part of it is also, I've been around a little bit, they knew about our website and all that, so convincing them was easy. Not an issue. I was sold later. But anyhow, good team working together. We developed a separate setup here for testing, so it's an environment where I can see it remotely from what they're doing. And it's like a micro or nano cloud. We can do our work online, yeah, away from everything else. Yeah. And we just upgraded that computer also because 5.0 will need some extra CPU usage for at least the testing. So things are good. What's our timeline for 5.0? Realistically, I'll probably have a preliminary alpha article end of next week. Maybe a little bit sooner. This guy has a tendency of speaking like a Microsoft type, very conservative, but gives an estimate, always beats it, kind of thing. He is not a cowboy. He's not looking at best case. He's normally looking at reasonable, doable tests, and of course, usually surprises. Let's see, anybody else on this side? No, we're good. Hey, Nancy, let me get you on the other side. There we go. Nancy has joined us. We'll welcome her back. Hey, Roger, how are you? So that's that. By the time we get 5.0 in the hand of people to use it, I think it's probably looking at sometime in May, realistically. I mean, we could do sometime in April. I'm not sure how realistic that is, but that's why we put so much effort in 4.9, 1.06. So that's a very good Band-Aid, a solid Band-Aid. So we're not under a gun and rush 5.0 and mess it up. 5.0 is very big. It's handling a lot of stuff. So the code is huge. Debugging is not going to be quick. So we got to really spend our time on it. I've not been marketing it. I've been fairly quiet. I'm just trying to get these things done first, and then see how the results are, and then there's always time for marketing it. Why is that? As Admiral Esposito says, at 8:30 Chicago time, they ring the bell every day, 5 days a week. That means there's always a market. There's no rush for you to do something this moment. Make sure you don't do it wrong. Make sure you do it right. Okay, having said that, here we are. Okay, let's go to econ data. Okay, interesting week. Employment data on Friday. Second week of March. I don't know. Always happen like that. I don't have a good recollection there of 28 days in February. It could be also when when the first week is. I don't know what the deal is. Maybe I have to do their survey. Whatever is the case, they went to this week, right on last week, which is the first Friday. This is the second Friday. Next week is expiration. Now, of course, again, 17th expiration. We roll the June contracts on Sunday. All right. 220 is consensus. This probably will be revised by a good number. I don't know up or down, that I can't tell. But usually this is very noisy, extremely noisy. And also we're going to look at what happened in January too. So January is going to be revised. February is going to be revised. Voila. I'm sorry. We're in March. No. December is going to be revised in January. This is January. The 517 is January, right? So December is going to be revised, January is going to be revised. We're going to deal with what February is. Okay. 220. Now, let's go back one more step here. Today, ADP came in, and they fixed it. Yeah, it's 242. They were 240 this morning. Yeah. And I went to their website, went to ADP website, and it was 242. Yeah. Okay, there was a revision up from January, from 106 to 119, and here's was the range. Consensus was off by 20%. I think tomorrow number is going to be, Friday number is going to be big too. I don't think it's going to be 517. Obviously, 517 is going to be adjusted. I don't know which way. Could be up a little bit. Okay, but 517 is a pretty big number itself. Now, I know White House is going to go and say nobody has had in 2 years so many new jobs ever. Well, first of all, we have more people working than ever before. Secondly, he came in the midst of COVID, where we had 20 million layoffs in 1 week. So it's easy to beat those numbers, when your benchmark is that low. But it's been a pretty strong job market, and you could see it in the inflation data. So 220, I'm thinking that it's probably going to be around 250 to 300 area. That's my number is going to be. I don't know how much this would be changing upward. I doubt it will be downward. We'll see, but it's very noisy. And the number is big, so maybe downward. I don't know. But bottom line is, we're going to bet on this. And I think it's going to be more than 220. It's going to be around maybe 250 to 275 number. Okay, so will it beat 325? There's a possibility. Who knows? Nobody will know what this number is until tomorrow night. The only two people would know that: Chairman Powell and President Biden. And it comes in pieces, in emails in pieces, so that nobody has the full view of it. Just like CIA method of doing things. So to sell. Yeah. So we'll find out. Okay. Jolts came in. Okay, I forgot. I missed Jolts. I was in the middle of a trade. Let's see what Jolts did. I remember Anita mentioning that to us today, intraday, but I forgot. Okay. What it came at? 11 mil. Device up 11.2. Consensus 10.6. We're above that too. Okay. We gotta do something. This is nuts. This is nuts. Yeah. Nobody. This stands for job opening and labor turnover survey. Yeah. Just anyhow. But anyhow, that's why job market is also so tight. This stuff, they can't fill these. Yeah. And part of it, people don't want to work. They got too comfy. Yeah. Okay. What else do we have here? Do we need to worry about? There's the talk of CPI, PPI. I think that's the following week. Yeah. Before we get into the Fed. Now, Fed is coming up soon. Where's Fed? Hold on. Where's FRB? Huh? Oh, there we go. Where's FRB? Hold on. Monetary policy meeting calendar. It is 21st, 22nd. Okay, Persian New Year. I see. There you go. Okay. So that's a couple of weeks away. Yeah. Let's see it. There we go. Persian, yeah. That's beginning of spring. 21st, 22nd. So exactly 2 weeks from now. I will assure you 2 weeks from now I'll be in mush. I hate Fed afternoons. It's just wild. It's just wild. You can't trade it. It's too wild. It's just, they bring you in. They sucker you in. You start some MNQs. They give you some money. You get comfy. Okay, things are easy. Then you do a couple of NQs. Again, they sucker you in. You make some money. The moment you increase your bet size, they come and kill you. And you're holding the bag. So I hate that. But nothing is easy, right? This was easy. Everybody has done that. Anything else we need to know here? Oh, Beige Book. Oh, Beige Book came today. Holy mackerel. We missed that one. Let's see what that was. I forget what even. Oh. So what is it? Oh, yeah, read the book. Okay, that's right. That's right. Sorry, waste of time. Yeah, here. Waste of time here, yeah. Probably my email, yeah. By the way, you can subscribe to Federal Reserve emails. They're fairly decent. Okay. Okay. Questions? Any questions so far? Let's get to charts. All right. Okay. Now, you recall last week we said that we want to see what happens at 200 days. But sure enough, we come and hit 200 days. That was the first, right? That was it. Yeah. I think we went through it or we touched it. I forget. We bounced off. Went 2 days up and then immediately killed it. Of course, yesterday was a huge one because of the Humphrey Hawkins testimony of Chairman Powell. And now we came in from underneath at 50. So I still like to do the test of 39.40, which is 200 day, and maybe we're getting set up for that for this weekend, for this Friday. So then I'll make a call on CFD. Until then, I'm going to sit flat. There have been times I sit flat when things get a little bit mishmash like that. I sit out. There's no rush. The key thing is that our results on the calls, and I'm not too crazy about trading for the sake of trading. Here's our performance chart there. There we go. As you see, with the all-time high. Okay. As a matter of fact, all this time that it went down, with the exception of early parts, this is most of this year, most of this past year and now, we've managed to go up. We had one small loss, like 16 handle, rest of S&Ps, and then we took on about 300 points. So that's 3,000 Dow points, if I'm right. Anyhow, we keep track of it in that Excel sheet. Anybody wants to have it? I can't give you the Excel sheet. I can do a snapshot and see the data. You see it matches every single call we've made. And we have emails to back it up. Why do we do that? We just want to double check the work of David Dijak. Yeah, he's human too. He makes mistakes. I caught him once. It was not intentional, but I was in Chicago. One of my trades doesn't make sense. I send him to, what do you call it? I think it was long, and I said, I'm reversing to shorts. And he goes, you were short. What? No, I don't think so. So there was an email he was missing. Yeah. So I said, no, we're going to not just that, we're going to also plot it. We're going to keep track of everything. Yeah, he at that point, he had 125, 140 market timers. Easy to displace one email. Remember, we get a chance to change our bias 2 to 3 times a month on average. 2 on average, really. Mine is about every 18 days. We keep track of that in that Excel sheet, in calendar days. So almost every 3 weeks over this long period of time, market calls. Less than that, you're day trading, and you can't really manage a portfolio like that. So, and there was a fellow in east coast of Florida, I think in Fort Lauderdale. He was changing his bias daily, and was doing it at 8 in the morning. We all banded together, all the other timers, wrote the letter to Jim Schmidt, and we said, Jim, can't do this. This is not market timing for ES and NQ. This is for SPX and SPY, and you can't have people, first of all, changing their bias in the morning, and your cutoff is like 8 in the morning, 8:30, and he's doing it every day. That's not market timing. So he put it into it, and he was number one for like, I don't know, 4 months. The moment we put that change in, he went to zero. He just collapsed and he quit. I mean, he's good at what he's doing. Let him do that. This is not it. Anyhow, back to here, 250, 200 day and 50 day. By the way, last night, this morning, CNBC called this 500 day. It says we touched 500 day, it stops. She meant 50, but that's Becky. It's okay. Okay. Hey, she went to Rutgers. I understand. So it's okay. Yeah. Let's see. She actually is a nice girl. We've had a couple of nice conversations. In the old days, when she used to cover me on from NASDAQ market side. Now she's done really well. So good for her. Anyhow, 50 bar, we hit yesterday, closed at it. We were underneath it this morning. We're closing at it now, or fairly close to it. 3997. We are almost there. Bye-bye. So, I think we're getting set up for Friday non-farm. So, over the weekend, I'll make a call. I just, this was too hodgepodge, and I kind of said that it could be. Why? This was very oversold. We said that too. We said that be careful, it could pop. And of course, we're still in a, if you do it like this, you'll see, we're still in a bear market environment, so to speak. Look, this is our last all-time high. So it goes back to more than a year ago. Looks like early January of 22. So in that sense, in that realm, that was a bear market rally. Okay. CIs are turned down. We have CI dip that's negative. It's fairly weak here on the McClellan oscillators. We did go into what's called launch pad mode, but it failed, it fizzled. And then it went in for 2 days, and then because we have too many shorts on, and those are very nice trading days, by the way. Oh, absolutely, these are the best days for it. Thank you. You just keep buying them. Buying, sell 10 handles higher. Buy, sell 10 handles higher. Manually, you don't need that work. And you clean up. Those were pretty good. Yesterday was good. Today, this morning was difficult. Oh well. Welcome to America. One second. Do something here. 1 second. Before we go there, I have a page issue. Yeah. Okay. Good. Now. Volume yesterday hit 5-0, 5-1 on a down to up volume, the inverted. So, but that's just the beginning. Yeah, that's just the first up, so we'll hold. And NASDAQ was a little bit over 2. When we get to 10 and above, remember, I don't think this is logarithmic. We get 10 and above, then it becomes really significant. Right now, that's why we draw a line at 5. So it's just nothing there. That's a nothing burger, I think. Okay. Canaries in the coal mine. All right. Also is selling at that 50 bar. We had 2 drops on transportation. Went back up a tad today. It's at -1 sigma. This one is also, it's about -2 sigma, 1.5. These CIs are for these, not for the top, for the bottom. I really don't care much about utilities. I did this for my sister. The only person who cares about this chart is her, because she keeps buying, what do you call it, electric utilities. It's basically it's a bond, yeah. Except she's getting a little bit better yield. She's got tons of Southern California, tons. Oh yeah. She probably forgot what she had. SEC stock. Both of these are on sale. You can see that. So path of least resistance to a downside right now. Not up. Okay, detrenders. 5 o'clock. Okay. Ooh, we got a -1. Negative, positive, positive. That's positive. Okay, so almost 2 negative. But this is post. Okay, I'm not so good. We'll call it neutral. But 1 out of 7. Remember, this is neutral. Is negative. Okay, so no signal per se. Yes, people jumped in here on some buys. They could see that. You see that cross came, golden cross down. It jumps up. We've been under death cross for a while. We jumped up here too, and then came back down. So actually, this is a little bit earlier. Our main interest is Russell and NDXY technology, smaller caps, more fragile, more interest rate sensitive than anything else, and so it should give us a clue. Technology will always lead, and usually it'll be a bad day in the U.S. if technology doesn't lead. So keep an eye on the X. We're still above. We could have a cross coming. This is a golden cross coming in. If that gets positive, you're going to see some buying. But first, why don't we flush it down first? I want it to be flushed down, then I want to go long. Yeah, I'm not trying to go short here. I'm trying to get long. Okay, so. Hi, Daniel. Hi, Thomas. How are you? Hi, Ted. Welcome, guys. Okay. SP1 Momo. Okay, again, mechanical system. Buy, and just went to a buy. Okay? Just went to a buy 2 days ago. So, is it this one? Yeah. On the 6th, it went long. Okay. So, again, we don't use market timing for this. Buy this automatically. One person was asking, can I just have this? And I'll pay you this and forget my PMT. What kind of price can we work? Hold on. This is not a custom-made cookie operation. You know, like a bakery. We don't do that. This is not. We don't do cakes for birthdays. Okay. One thing we make. That's what you get. You don't want it. That's fine. My problem is I just don't have time. So I want to hold on to what we've got. Keep it as a cookie cutter because a lot of people are using it. That's being good to them. The only reason we have these two is mechanical. Mechanical systems give you unbiased. We haven't touched these. I don't think since 2004, 2005. I know there was a change on something inside EL, the back the trend following, and we changed that back then, and that's it. We have not touched it. So this is 2008, and we haven't touched it. You don't change or touch things that works. This one is 1996, 97. We haven't touched it. So anyway. Wasn't in this format per se, but the code hasn't changed. Back to here. Momo is -1 sigma, came back up, dropped again. We had same problem with Momo. Now Momo is a smaller brethren, it's faster. I was looking to see if we can get a 10. Looks like we're not there yet, but maybe by Friday close we'll be at 10. I expect Friday is going to be a negative day. And if it's a Friday and the number is big, yeah. Basically, Fed came out yesterday and said, don't hold us to it. We're data-driven. All we know is that we're going to be higher, longer in rates. Thank you. End of the story. Market sold. So, no data here on a 52-week high and lows for S&P. Very quiet on the low side, obviously, because we've been rising a tad, but also this has been mishmash. So, if anything, this tells me, which is about here, we may have a peak here, but in absolute scale, it's too low. Think of it this way. You get it weekly. We really need a big number like that. So we're not dropping big. We're not going up big. We're just in a limbo. Not a good place to be, by the way. Some of the correlations have broken, correlations. Some of the trades are, that's what a lot of trades are getting to difficulty. Be prepared for that. It's not to say your fault. It's not to say you put a bad selection. Talk to other guys. Talk to professionals who put trades out. They're having problems too. Talk to system guys. They're having problems too. I mean, I work with 2 system houses in Chicago. On the average, they run 200 systems. You should see what they say. Yeah. I'm not going to quote that, but they're frustrated too. We're in a very unusual market. Better adjust your thinking. Because you can't change the market. But market can change you. Keep that in mind. Okay. Moving forward. SQ. Okay. SQ is doing nothing. Earlier, it looked like up here, I'm talking about earlier about this timeline. Maybe there was going to be some bets to the downside. Nothing. Boom, because we were rising. Back down again, below 0 sig. It's at 1 sigma now, -1 sigma. Fairly close to the lower end of range. The actual empirical observed value is 110 to 170, way different than the design spec as we discussed, which was 100 to 150. And we're in the lower quartile. So going nowhere fast on the downside. I don't think so. There are no bets out there. Treasuries, okay. We're a 5% business. That's what's driving everybody nuts. Now they don't know I don't know where the 2-year is. They don't have an index. I wish people had it. Or if you guys know, let me know. I haven't seen it. But the 2-year it reached 5 again today. Of course, look at the rise on the 91 day. Basically, why would you take your money out of 5% and take a risk? For so long, the elders and the net savers of this country were making zero, probably since 2008 at minimum. And prior to that, maybe a little period there in 2006, they made a little bit more money, and then went back to zero again. So it's the first time they're making 5%. Well, they were forced to go into assets they knew nothing about. Options, futures, crypto? I don't think so. Do you think these old farts know what to do? No. No, of course not. That's why they are in bonds. The bonds were paying anything. Now they've gone into bonds, entrenched. They're probably not going to come out for a while. Deal with that. It's a different world we're in. I hate to bring this news to you, but my middle name is Reality Check. Yeah. Okay. The spread. We got to change this on Friday. Why? Rollover. You see the volume there? This is the Edge contract. We're going to be on J next week. Because the expiration, I think, is on Tuesday. The Edge will roll, and the volume is going to sink over the weekend. So on Friday, this Friday, we're going to roll. We're going to be long J and N. VX N23 is going to be put up. There we go. That's the July. So we're going to be long April, short July. You see this volume come up. And this is going to die by next Tuesday. Friday, next month, Wednesday is the settlement. Last day of trading on Tuesday. If I'm right, it's not the following week. As you know, VIX is middle of the week expiration. But the way it's behaved, that's what it seems to me. Anyhow, now what does this value tell us? Negative 2.19. That means the difference between this rate and this is 2.19. So we're kind of up, okay? In the market, we went up, so the yield, the spread dropped. When it gets around -3 to -4, somewhere in there, and there's no rule, hard to pass rule for it, but 0.3, I'm saying -3.30 to about 3.5. Usually that marks the top of the market, and then when it gets to 0, which we were heading here into the, remember, 0 is up here. 0 is up here. We're heading up, then you get the top. Now, I'll tell you one thing. Empirically, this value has shifted since COVID. Since COVID into the ball game, that value has shifted. Okay, and we used to actually put a factor in there to adjust it. I've taken that out because that's also went haywire. But the issue is though, the shape is the same, the reaction is the same, the absolute value is slightly different. But you could pick what's going on here. So we're not near bottom, nor are we near the top. No signal here. Same thing you're hearing here. It's a midway here near 50, that's 43.6 as of the close today. I'm refreshing it. Yep. For SP2, true and tested, short-term oscillator for the bulls and the bears to be in charge. Right now it says nobody is. A couple of days ago it was the bears and then rally. Okay. We did have, or about to have our rendezvous point finally. I think this will mark FOMC, non-farm. The rendezvous point will be non-farm, and then we rally up. So I would be prepared to hear from us on your email on PMT over the weekend. First, we're going to roll with Timer Digest, and then we put a trade up. Did not put one here because I didn't believe. Hold on. Did not put one up here because I didn't believe it. And usually I want to buy the second leg anyway. I want to buy the W. The W is coming down, up, down. I want to buy that. I don't want to buy this one. Why? no professional will get into a trade without a confirmation or a retest. I'm waiting for a retest failure. I want to be tested and fail going down, then I want to buy it. So that's what I'm looking for. Is it going to be Sunday? I don't know. I'm going to be I'm on the lookout. When it will be, you'll hear from me. That's all. I just don't know. We'll see. If not, it could be a Monday. It could be another flush. It could be something overseas. It's just, there's different variables. Of course, next week we have a rollover going. So Monday, Tuesday could be a little bit hanky-panky, but we'll see how that goes. All right. Larry's up and down volume ratios. Again, absolutely no signal here. We have no follow through there. We don't have a big signal there. It's just, we're just in a tank. Looks like we're in a dinghy in a tank. We're just banging against the walls of a tank, goes back and forth. We're just not going anywhere fast. The data does not support anything. All right. We began posting these again. We got behind. Admiral Chico was a little too sloppy and lazy, but I had to talk with him because Norseman and what's his name? I forget. What's the other fellow? Here we go. I'm talking about this one. There we go. This one. Norseman and Walter Deemer. Yeah, these guys. When we keep up with them, they comment on about us. We comment about them. But this is the up and down one. We'll post one tonight. We usually sometimes I get a chance to do it during the day. But keep an eye what's going on. You can plug it. You can get it bigger, I guess. Yeah. Well, you can see detail that you need. Okay. Now, the key part is not that. It's not this. It's this link. Go and read this PDF. And we host it on our website because, no, on Amazon actually. Well, it's ours. We pay for it, but it's on Amazon. So that you guys really read and understand how this works. By none other than Paul Desmond himself, president of Lowry's. He passed away. Good man. Okay. All right. Now, let's go to buying power index. As you know, this is very unusual to TradeStation because these what's called value indices. I don't know who else has it on the TradeStation app, but they've always been pioneering offering, leading edge, state of the art data and technologies, and that's what attracted me to them years ago. And I think it was a good choice. Anyhow, ES went short today. Okay, that's your ES. Peter put this together. Peter Cook, our chief moderator in the chat room, but he doesn't take the shorts. He's just not good with shorts. He says. That's fine. I respect that. At least he knows himself. But he takes the long signals. I trade both. I take both because for me, long and short is the same. I really have no bias. It's just for me, it's mechanical. I mean, I look at the patterns and do. Now, although it's easier on me on the longs in results, but in terms of getting into it, getting involved, kicking in, putting a position on, coming up with stops and targets, for me, that's no different. It's very mechanical. So short here on ES, short on mid caps, that's EMD mid cap, short on Russell, and just short on NQ. So all these fours at the same time, usually there's a little lag in all, tells me, yeah, it's going to be interesting Friday. Yes, Walter Deemer. Yes, very smart guy. Yeah. His book is famous. When it's time for you to buy, you don't want to. Yeah. That's the time you want to buy, but nobody wants to touch it. Yeah. Blood on the street. Is there anything else we're dealing with here? No, these are my stuff. Not going to Tiger Shark. That's PMT. This is where we are now. Are we open? No, we're closed because of the 516. Okay, that's good. Okay. Oh, systems are backing up. Good. All right. So a great day here. This one bar. My early short was good. I just got chopped here a few times. Chop suey. Yeah. All right. Last but not least, let me go to this and go here and talk about this chart again with lots of ads. Drive me crazy. I gotta keep going down and say I don't want this ad, so maybe they'll drop it. Wealth advisors think. You know what? Your health is your wealth. Think about that. All right, here we go. So where are we? Well, we have been recently 55 area. Again, no signal. It's waiting. He doesn't know what to do. He doesn't know which way to go. Also, may I suggest you go to 5 years, do updates. You can go to stock charts. Here's the symbol. It's simple. You could see larger span of data, get a sense for the range. Down here, about 55, from 45 to 55 area, no signal. I mean, I stay out of it. We're right above it. No signal here. So, not easy to trade. Not a question. This is not a confirmation. Any questions for me? No, I did not work on these. I work on a predecessor of this one, which is F-18A and B. Yeah. I work on the first 24. Two squadrons. And it wasn't moving, trust me. When I got there, it wasn't moving. That's why I learned my namesake. You gotta get those things moving. You can't pay $100,000 a day in penalty per tail number. 24 ships and squadron. We were paying $2.4 million back then in 1980 when interest rates were 19% with Paul Walker in charge. Just in penalty a day, 2.4 mil. Yeah. You start working. Yeah, tough, hard. You start having 22-hour days. How do you think this country is defended? Average person has no clue. Absolutely clueless. All right, guys. Anything else for me? Again, PMT guys, make sure you watch these. This is part of the PMT guys. If you're in PMT, you're supposed to come to this webinar, but at least watch it. We're beginning to email it out and reminded them that, guys, this is part of your package. This is part of your charts. That's how we present the charts. Otherwise, I'll never post them. I have no time. And back then, I didn't have ORB. Okay, when you have ORB, a lot of your time goes into that. That's our flagship. It's very complex. We're at 4,000 plus. I think we're probably, by the time I get 5.0 in my hand, we could be edging 5,000 lines of code. Not easy. And my part, the concept of the spec, the statement of work, SOW, and the indicators in it that make the SOW work is about 1 page. I'm sorry, writing 1 page. Coding, probably 2 pages. So that's like 100 lines, 150 lines tops. Rest is managing. Managing the orders, managing the cash, managing the order flow, the prices coming in, computations, that kind of stuff. But that's not what I'm good at. I'm not. So that's why I hired 2 guys to go and do that for me. You really have to understand the inside of TradeStation at Chicago, not your inside of your TradeStation on your machine. No. In Chicago, when it interfaces with Globex matching engine and executes. And what we're doing now is, again, we're rewriting this part. We're writing from scratch. We're basically creating our own micro API. So why it's not how it is. Michael, could we? Oh, you have a question. I gotta go to your question too. I'm sorry. Could we in a longer term trading range between and a strong economy? You know, that's a fundamental question, and it's forecasting a fundamental value. I can't say I'm good at it. I was probably exposed to it. Was I trained for it? I don't think so. I'm more of a technical analyst, so I'm more of a chart and numbers. But I think 200-day, given the shape of 200-day. Okay, I mean, actually, let's do it this way. Let's do it another way. Hold on. Let's do it. No. Let's do this. But let's change our frequency and go to weekly. Okay, so we get a little better view of things. Okay. You could see that, you know, overall, the economy is on the mend. It's trying to digest the higher interest rates and hang in there with the higher rates, with the Fed not too panicky. with a higher target. I think they're probably going to be talking 3% or 4%, rather than 2%, because they can't attain it. Okay, for a while, the economy is going to improve, and we're going to be bouncing off 200 bars on the market going up. The economy is going to stay strong if the data is strong. If you have JOLTS, if you have ADP, if you have non-farm at these levels, you got a PCE. You look at what do you call it? Housing permits and starts, new starts. We're going to be in that range. The economy is going to be strong, and there's so much Fed can do. So I'm glad we're not in a hole. That'd even be worse because the balance sheet is so big now. So, but let them roll off the balance sheet. Now you had a question, Michael, which I did not answer. I asked you, let's do it here. Let me go there and open it and bring it up, and I'm going to deal with it here. Let me read it here first to remind me what it was. I forgot, to be honest with you. What's this? Chase. Oh, no. No, oh, that's Bloomberg. I see. Oh, Bloomberg close. So let me go there and see what you have. Okay. A possible scenario. SPX from 1984 with a 4-month consolidation after bottoming. Oh, hold on. Are you saying from 1984? Oh, are you saying, hold on, let me ask you this, Michael. Are you saying that that 2023 is has the analog called 1984? Is that what you're asking? 4 months of consolidation after bottoming. Yeah. Is that the? Well, let me go there. Hold on. Let me see if I can get this right. Hi, Eric. How are you? Hold up. So why can I get this screen up? Oh, my bad. Yeah, is that the question there? Michael, am I understanding your question? That this looks like 1984 after 4 months of bottoming out. Let me write the question. The possible scenario. SPX from 94 with 4 months consolidation after bottoming 50 and 200-day MA. I have no idea. I can't immediately tell you yes. That was after Walker, correct? Yeah, okay. It could be, but I got to go there and plot it, and then normalize it because the scale is different, right? I mean, back then, hold on. Because it's attached in the web page. I mean, I'm sorry, in the email. I'm having an issue there too. Let me see if I can maximize the size. I'm trying to say zoom in. Okay. Yeah. Yeah. We were trading SPX was trading around 160. Yeah. Low was 147. High was 183. Yeah. I have no idea. I mean, the only way I could do that properly is to do an Excel sheet and then normalize it. Here's the question. 84. Well, wait a second. I thought Walker was done by 82. Isn't that right? I mean, the tough medicine was put in by 82. So could it be he was there 2 more years? Ah, wow. I don't know. I gotta take a look. I can't tell off the top of my head. But I remember I was wrong. I remember 82 summer was not easy on me. I had just been in the market 2 years. I knew nothing. There were no charts. There were no indicators. All we had was daily graphs from what do you call it? From I was in California, so Saturday mornings it would be delivered by mail from Investor Business Daily, William O'Neill. And I used to carry that with me everywhere I go. I would be at Northrop in Plant 1 with me. Somebody asked, "What is this for?" That was on a call. If there's something else up, I mean, on my position, I had to be able to. We got charts. Now, I only traded the options that we had charts there. So that's what I used to do. Trade options of the daily graphs. Because there was no platforms. There was no monitors where the best you could do was a VisiCalc. You remember this resolution? You couldn't plot something this with different colors. It was a mess. So I don't remember it that well. But I remember one thing. 82 was not easy. I just took a course with Jack Shelton, north of that. Convinced me that I should take some MBA, so I went to UCLA. Jack Shelton was my first professor there, the guy who did Black-Scholes a year ahead. And he was spot on too. He said, this could be a beginning of a nice move, but beware that there is no signal when it's the end of this downdraft. You know, the signal that the recession is here. And 82 was a tough recession. But that was a tough medicine, and Volcker had to do what he had to do. I'm 100% behind Volcker on that. Not because he went to Princeton and was at the economics department. No. But he was the right guy for that period. Tough guy, no bullshit, and he didn't care about anybody saying anything or this. I don't know if you watched him in any of the, this is before Greenspan came in. If you watched him before the Senate hearings, I mean, he just boom, bulldozers over them. Yeah, they had no chance to argue with him. Yeah, it was different. Jerry Powell is a nice gentleman. Volcker with his cigar, his size and his what do you call it? Swag, as Rich Ruscio would call it. His swag. That's what we needed back then. So, I will do this, Michael. I'll go and set up a chart and take a look at it and download this and take a look. Okay? I just can't tell. There's too much movement here just on the chart you sent me, which is nothing unusual. That's SPX, but it's hard to visualize that against it. The other thing we got to do is get time shifted, and that's where time will be next time. Hopefully, if I get a chance this weekend to do that. I think it'll take a little bit of chance. I'm sorry. Yeah, exactly. So yeah. I just don't see us moving that fast. If you look at this chart that you have here, here's the chart from. Here's what. Hold on. Let me bring this chart over. Here's what Michael sent us. Okay. I just don't see us doing this. Okay. So I gotta go and take a look. Now that could be next year, Michael. Yeah, that could be next year. I think we're pretty set on where we are now. I just don't see us. I see Mike. How are you? Hey, Dave. How are you? I don't see us changing tack here. Yeah, I think given where we are with this data, if the economy stays strong, Fed hands are tight. They got to keep pushing. Yeah. And until we get a little bit ease on the employment cost, DCI, the numbers are going to be up there. Listen, look at groceries. Okay, look at gas. And look at rents. Look at all of these. I mean, rents are coming down in certain markets, not down here, but certain markets are coming down. I usually measure a simple rule: $100. Okay, keep it simple. $100. How many bags of groceries you get? Used to be 1.5. Now it's not even one bag. And now it's Whole Foods, just Whole Foods, always Whole Foods. It tells you what's going on with the dollar. Yeah. So I don't know. Look. If you look at ticket prices, I just bought some tickets for baseball. I couldn't believe, and the handling, the fee for handling, just for convenience, you ordering it over online, unbelievable. But hey, did it phase me? No. Did it phase others? No. The place is packed. This is the spring training for Red Sox, packed. So you don't ask questions. You gladly happy that they let you in. Yeah. Anyhow, I'll look into that for you, and I'll report next week. Okay, it's not that bad. Okay, I just gotta get a little bit of time. Yeah, the trick is not the data. Data is easy to bring in, put it in a Excel sheet, and manage it. You know, we used to do that as analogs, but you got to time shift it to see does it make sense or not. I just think 84. If 82 was the low, which I remember it was, it's going to take us another year. I don't know. but I don't think it's going to be this year. Yeah, I think credibility-wise, Fed has had too much of this issue. Just remember, this is a different Fed than 84, 82, 84. Okay, why? Social media. Yeah. So they have to respond to that, and I think that paralyzes them. They'll be too afraid. Are they going to be too strong? Are they too passive? Are they ahead of the curve, behind the curve? I don't care how smart you are. The impression in a global stage reaches you. And so I don't think anything will come down fast. Dennis, yes, sir. Yes. 1969, yes. $5 bag of groceries, $25 a week for two of you, yes. But my dear friend, this is not 1969. This is a different ballgame. Yeah, yeah. Yeah, but in 78, I bought a car from British, British Leyland, the lowest level they had. It was my first loan. I was scared just coming out of college. I had $1,000 left on my student loan. I want to pay that, and now I'm taking another loan. I don't think so. So I bought the cheapest one. It was like $4,000. Okay. Now you're lucky to find anything under 60 to 80 from same manufacturer. Lucky. And the high end is over 100 for 2-door. Yeah, F series. Yeah. So just crazy, just crazy. The question is, where are we heading? Where are we going to be 10 years from now? Who's going to afford housing, food, schooling? Forget gas, but this other stuff, who's going to afford? That's the question you want to ponder. Now, remember, me, I'm a geek. My stuff is software, monitors, and hardware's coming down in price. So I'll survive. But the average guy out there, holy mackerel! Have you seen the cost of like building and manufacturing a factory now? Incredible. But you're right. Inflation is just like a Tylenol. It puts away the headache. It doesn't get rid of it. Yeah, it just puts away the headache. Dave Bancroft, welcome back, sir. Do you see a move much lower for the rest of the year? No. I do believe we have a downside. I don't see us going past 3,600. About 10% from here. Why do I say that? I respect Marko Klonovic. If you don't follow Marko, I think you should. Marko Klonovic, head of JPM. Let's see. Marko Klonovic. No, Klonovic. Is it how it is? No. JPM. I am not spelling it right. JPM Quant. Hold on. That's it. Yeah. Marko Klonovic. That's it. This is 2020. 2020 again. 19. Let's go to Wiki. No, this is what you want. This is the guy you want. You should be following this guy. Bryce Frank. Yeah. He's looking at 10% down. I kind of expect that, yeah. One of the smartest guys I know. There's a lot of write-up on him on Bloomberg. Marko. Yeah, he runs the quantum shop at JPM, Chase. He's looking at 10%. I think it's realistic. He says 5, maybe 10, but I'm afraid 3,800 won't do it. Why? That's not low enough. You want to touch this area, so you want to at least get to this low, which was the October low. So that's, I would say, 10%. Yeah, Marko. Marko is very yes. Yeah, well, where they're going to school? You got twins, yeah. Hey, David, you always did everything big. Yeah, Yeah, you're lucky they're not going to Princeton. Yeah, that would have cost you about $100,000 each year for each of them. So, 2 kids, boom, $800,000. Welcome to America. All right, with that said, let's close this show. We're gonna get this thing posted for you. It takes a few minutes to post process. And again, as always, it's a pleasure to have you. It is, of course, recorded, and it'll go to our YouTube. Best thing is to subscribe. If you subscribe, anything we post instantly gets. Because sometimes I get behind sending email back. Sometimes I get a call from a client, what have you. As you know, we're fairly busy. Oh, Berkeley and San Diego State. Well, that's not bad. Yeah, they're not too expensive. You're good. Berkeley's a good school, especially the nuclear physics. But anyhow, it will be posted there quickly. And we send emails out. Sometimes I forget. Also, I like to send emails in the morning. I've learned from, again, that's not my area, but I've learned in internet publishing, best time to send the email out is about 10 in the morning. That's as fast. But tomorrow at 10 o'clock and now is a lifetime away. You might want to take a look at these at night time, the day's posted. So subscribe, it gets you instantly. Okay. Thank you all. Glad to see all of you. And we'll see you again next week at on Wednesday. And that's could be a tough one. Now, one caveat: if it's a crazy Friday, no, it's not this one. No, it's 2 weeks from now. Sorry, 2 weeks from now is a FOMC meeting. If it's a crazy day, you don't want to deal with me. I don't want to deal with you. Let's be upfront. We'll move it to Thursday, okay? And you need to have the dust settled. Remember, there's always a reversal. Day after FOMC, day after non-farm. Usually is. So my conclusions 2 weeks from now will not necessarily be accurate. We got to get the dust settled, get out of the way, retest, so to speak. So we'll see what kind of day we have. I just try to stay away from non-farm, not the non-farm, but FOMC. It's just not easy. They bring you in. They bring you in. Anyhow, thank you all. I talked too much. Let me post this, and we try to keep this to an hour. And we'll see you next week.